What is a candlestick? A candlestick is the base of candlestick's chart. Candlestick represent price action during a specific period of time. Candlestick is formed by the open, the close, the low, the high of that specific time frame. Let's look at that. So here is what a candlestick look like. This is a candlestick. A candlestick has 5 parts: the open, the low, the high, the close, and the body. Okay, so a candlestick have 5 parts: the open, the low, the high, the close, and the body. This is the body of the candlestick. So price opened here and went down. From the low, it went up, make a high, came down to close here, and that's where majority of the price action happened here in the body. Candlestick have different body size. A candlestick can be bullish or a candlestick can be bearish. Let's go back to my tablet to look at that. So let's look at a bullish candlestick. Here's the candlestick. Now we are looking at the bullish candlestick. If price open low, this is an open, and close here on top, this is a bullish candlestick. Price open below the closing, and this is the low. We know that this is the low, this is the high, and this is the body. So this is a bullish candlestick. During that period, price open, went down, make a low, and went up to make a high, and came down to close above the open. If price close above the open, we have a bullish candlestick. Let's look at a bearish candlestick. This is a candlestick. If price open and close here, if the close is below the open, now we have a bearish candlestick. This is the high, this is the low, and this is the body. So the difference between the bullish and the bearish candlestick is the open and the closing. Now during that period of time, what price was doing? Price was going down. This is a bearish candlestick. Okay, so now we're going to look at the anatomy of a candlestick. We have the physical part of candlestick, but we have the psychology, the market movement of the candlestick, what the candlestick is telling you. We know that the candlesticks have 5 parts. We have the open, we have the close, we have the low, we have the high, and we have the body. So everybody should understand that by now. And we have bearish candlestick and bullish candlestick. Right now, because the close is below the open, is above the open, this candlestick would consider a bullish candlestick. That's meaning it was going up during that period of time. But here is what I want to focus on. This is the body, okay? This is the body of the candlestick, okay? So you can see there's two lines, a line on top that represent the high and a line at the bottom that represent the low, where price went. This line on top has a name. The name of this little line called a wick, or sometimes they call it shadow. Shadow. Okay, this is a wick or shadow. I think you will hear that you will hear it a lot. And this is the upper shadow because it's the one above the close. This is would be the lower shadow. Okay, lower shadow or wick. Okay, lower wick or lower shadow. Upper wick, or upper shadow. Okay, these are the wicks. This is gonna be important to us because when we are looking at the candlestick, what does that telling us? The size of candlestick. There is long candlestick, there is short candlestick. Let's look at the size and what the market is telling us depend on the size of the candlestick. Let's look at some example. So we have this candlestick. If you look at this candlestick, we say that's open, that's close, that's low, that's high, and this is the body of the candlestick. So if I ask you what type of candlestick that is, bullish or bearish, if you tell me that's a bullish candlestick, you're right. This is a bullish candlestick. Why? Because the closing is above the open. The open is here and the closing is here. So, but when we're talking about the body size of the candlestick is important to us. Price open here, went down and came back to the open. And you can see price did a big movement. It gave us a long body. This is a long body candlestick. This is a long body candlestick. What does that tell us? That tell us during that period of time, the price action was extremely bullish. The longer the body is, the more intense the buying power for a bullish candlestick. The longer the bullish candlestick, the more intense is the buying power. There is a lot of buyer in the market during that time. That means the buyers were strong. They took control during that period of time. If it's a 30 minutes, during that 30 minutes, a lot of buyers are buying that asset. Okay, so let's look at another example. This is a candlestick. This is open. This is closed. This is low. This is high. And this is the body. Why I keep writing them? Because I want you to know it. What type of candlestick would you say that is? Very good. If you said a bearish candlestick, you're right. Why? Because the close is below the open. Okay? So look at the size of the body. If we look at the size of the body of that candlestick, what telling you? This is a short candlestick. This is a short candle, a short body candlestick. A short body candlestick. Why? Because you can see during that period of time is a bearish candlestick because the close is below the open. But during that time period, the price open went up, came down all the way down here, came back up and closed here. It formed a small body candlestick. The smaller the body, because this is a bearish candlestick, that means price was going down. The shorter the body is, the less intense were the sellers in the market. The sellers did not have a lot of control in the market. Even though during that period of time it is bearish, there is more sellers than buyers, but the sellers did not overwhelm the market. Okay, so doing bearish candlestick, there is a lot of sellers. Doing bullish candlestick, there is a lot of buyers. This candlestick is a long candlestick. This candlestick is a long bullish candlestick. See how long the body is? The body is really long. That's mean the price was extremely bullish. There is a lot of buying pressure. Okay. Price open went down, can't stay down, and went up from there. That was a lot of bullish pressure, buying pressure, a lot of buyer there. Okay, so if you look at this candlestick, this is a bearish candlestick. This is a long bearish candlestick. There is a lot of selling pressure. A lot of people during that 4 hour period were selling the market to push it down. Look at those small candlesticks. 1, 2, 3. Those, even though they are bullish candlestick, they are small, short candlestick, but we didn't have a lot of buying or selling in that time frame. It's a bullish candlestick. It's a short bullish candlestick. Why? Because not a lot of buying pressure. 4 hours. This is 4 hours. Look at this one. This is a spinning top. It's where price open, that's where price close. This is 4 hours. See, this is not a lot of buying pressure during that time. This is a short candlestick. You see, that's the difference between the long candlestick, a lot of buying pressure, a lot of selling pressure, and look at those short ones. Those are not we don't have a lot of buying pressure.